The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Okay, we're going to take a quick look at some of these markets today. Some a little bit more than others. Let's start out with the easy one first, which is the grain market. We had that report yesterday. We have a very bullish bias in this, as I know most of you know. The report was neutral to slightly friendly, I guess you would say. The market's working a little bit higher, which is nothing to be expected. We did get up to that 1058 level yesterday in November beans and sold off a few cents, but it's still very quiet. Of course, the news this morning about the potential, Russia's intervention into Syrian missiles or whatever it's going to be, that's, got the news item going the most, I guess, here. In the U.S. And really the market's actually not acting very badly at all, considering, the fact that we could be on the brink of something really, really serious. Let's take a quick look here at this Dow Jones because that's what they report on the most on all these channels. Let me share. Oh, say asked about the novice trader about the S&P. Just a minute, I'll cover that S&P. We'll do the Dow Jones first. As you'll notice, we had that bottom yesterday. We talked about the importance of that. We went up and made the ABCD at the 78% level on the Dow Jones yesterday at 24,440. You'll notice the sell-off this morning. Given the fact that we got all these missiles and everything coming, is actually, really quite minor. And I mean, that can change accordingly. But if we get below, 24,000 in the Dow, that'll change this pattern, and we'll be looking at something a lot more sinister going down and looking at it. But right now, it's holding up incredibly well. I mean, given the fact that, this news is usually very, very bearish. We can see it in the, the emotionalism that we have going in the gold market. But that's what we're looking at here in the Dow Jones. This level that we're looking at overnight is around 24,000 even. And if we break below that, then then you're probably going to be looking. You most probably will be, because that's a 78% level of yesterday's lows, folks. That considering what's happened, that's relatively good support. That's it. We'll see what's happening. Anyway, well, Danny, if you think that's going to happen, who knows? I don't think that has anything to do with it, but we'll see what's going on. It's all politics. He attacked him once before. I don't think it'll make any difference this time either. I think it's all rhetoric. But believe me, I'm not a fundamental person. I'm basically a technical person. Let's move on to the one that's really moving, and that is the gold market. We want to pay very close attention to this, folks. Let's just get this up here and take a look at it. Let's get right here. Okay, here's the gold market. As you know, we've been relatively friendly to gold. We really wanted to get down to that 1285 level, but we certainly couldn't do that, so we ended up buying it at 1230. Wow, let's try it again. I've got a very bad cold this morning, folks, so bear with me here, please. 1330 is where we purchased the gold 2 days ago. It's right now, it's at 1355. The important thing to look at here is, folks, we have a huge triple top in gold from September of last year to January of this year to February of this year. Now we're making the fourth attempt. W.D. Gann said, when you break 4 attempts, it really is significant. So that means if we get above 1365 sometime today and close above there, you're going to be looking at about a $100 move in gold up to around 1440 without too much trouble at all, would be my guess. But it needs to get above that level. With the news is coming out like it is, what I would do here I'll cover that S&P in just a minute, P. I want to get over this gold because we have position in that, and people are asking me like I know what's going to happen. I don't know what's going to happen, but we'll keep an eye on it. Anyway, we'll cover the S&P in just a second, but let's go into the gold market a little bit. We have this, actually it's a quadruple top in here because we almost hit 1360 this morning, the high 1359. And believe me, gold is very, very emotional, folks. I've been involved with trading gold since we started trading way back in 1972. Gold was, I believe, the first trades came out about $108 an ounce. So it's very, very emotional. And I spent, 6 years of my life trading gold and silver every day when I was at Drexel Burnham. So I'm aware of that. Now, the fact that silver, which is acting very, very poorly compared to gold, is not unusual. And let me give you my 2 cents worth here. And believe me, this is my 2 cents worth, and believe it's worth what you pay for it, 2 cents. So hold on here just a second. This is the gold and the silver chart together. You see, gold is back to the old highs back there, and the silver is not. Now, the reason for the difference in the fact that you show the gold is above that level is because they roll the contracts over, but actually with spot gold it's not. It's got to get above 1365 in order to get above that level. So keep in mind that that's a quadruple top in gold. If it gets there, that is, if it gets above there, gold is very, very bullish. Now, the reason why I'm wandering around here, just trying to, anyway, the reason why is you can carry $1,000 worth of gold in your hand. $1,000 worth of silver weighs a lot. You understand? So if you want to carry a lot of wealth, you can't use silver. But if you want to carry a lot of wealth, gold is the thing to use. Years ago, I used to have a money belt that I kept 10 gold coins in when I traveled. That's how crazy it was. Anyway, we'll see what's going on. And silver certainly reacts, but it usually reacts later. But the bottom is what we're looking at now. It's really very important here, folks, and I really very strongly suggest this, is if you're long the gold and you bought it down there, we were talking about it just the other day at around that 1330 level, is to take a look at where you should put your stop. And with the news very, very positive for gold, if it reacts badly today, I would have your stop at break even so that you don't risk anything. You got a $28 lead in something, and you don't want, if you're shooting for something bigger, which we possibly are, you don't want to lose any money. So I would what I'm doing is I'm raising my stops up to 1342 to protect a $1,200 profit, and that's what I'm doing, and then not even trying to look at it. That's the 10-4. By the way, we're going to have Norm Winsky as. Go a second, please. We're going to have Norm Winsky as our guest here in about half an hour, so that'll be good. And I will cover the S&P on this right after we get done here with this little break. I will cover it extensively. So remember, it's just my opinion, and these things don't always work, but that's what it is. So keep in mind that we'll have Norman Winsky at the break, but we'll take the first break here, and then we'll get looking at this E-mini S&P to see what's going to happen with it today, because very, very important support coming in here. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to take a look here at this E-mini S&P. Here's where we were last night. I want you to pay attention. Bear with me on this, folks. I want you to pay attention to this dark black line that we have from April the 3rd through April the 6th. That's very, very important. If you notice that once the market broke below that, it went down to the 78% level. When we went back above it, it went to the 78% level. You notice that yesterday what we did was we went up and tested that 78% level. Now the Dow Jones didn't get above it, but the S&P did during some emotional stuff to see what's going on. Anyway, let's take a quick look here at what we have going on now with the thing, because what we're doing now is we're looking at a market that is very, very close to touching the black line again. And that's all this is a support line, folks. Let's just get this up here to take a look at it. But that's what I'm using. Now, that line comes in at 26.18. We're trading at 26.34 roughly right now. That is nothing more than a 78% level retracement of the low that we made yesterday at 26.09. So the key level to watch here is 26.25. If we break below that, that's telling you that something's not right. If we go below 26.16, it tells you that something is really not right. So that's going to tell you whether the market's going to hold at these levels or not. Right now, it's acting pretty good. But as we know, the market is very emotional that first hour of trading, which we're certainly going to get that today, just like we did yesterday. So we need to watch this very, very closely. So the key level to watch to start off with is 26.25 and then below 26.16. Those are the levels that I'm looking at, because we break below those, that tells me that we're most probably heading down, and believe me, remember the long-term price objective that we have on the E-mini S&P, is quite a bit lower. So let's just keep in mind where we are. Remember, I'm going to bring this up from the newsletter on Sunday, because we did have a very bullish bias coming in here. But if we look at where we were, on Sunday night, you'll notice we were trading at 26.05. We're 20 handles higher than that. Even though we've been as high as 26.60, it's still relatively bullish. So that black line is very, very important for support and resistance. I don't know anything about the war stuff. I really don't. I've been involved with these markets for many, many years. One of my most memorable trades ever, and I never forget this trade because I trade gold all the time, but it was in 1980. It was in October 1980, and I was short gold. It was bouncing back to about $700 an ounce. It went from $865 down to about $400 during from January 20th to early August of 1980, and then it had a really strong 61% rally, and I was selling that rally, and it was around $700 an ounce, as I recall, and I sold it on a Friday. It had about a $2 profit in it when I went home on Friday. We didn't have all this overnight stuff. We didn't have TFNN. We didn't have any. Well, sorry about that, TFNN. I meant CNBC and stuff like that. But what was amazing is the fact that the market that Sunday night, the Monday morning when the news came out, Charles Osgood came on and said, "Ladies and gentlemen, Iranian jets have just hit Syrian airspace, hit their nuclear power plants. War has broken out in the Middle East, and the price of gold is soaring." And I'm short over 400 contracts of gold for all of my customers. I had about $4 million in margin tied up at that time, and I thought, oh my God, this is going to be the most terrible thing. And then I was taking a shower. I jumped out of the shower, and I was trying to hear the news from KNX in Los Angeles to get the gold fix, because this is what we used. We didn't have this overnight stuff. And he went through a whole bunch of commercials, and he talked about some other stuff. And then he said this stuff about the planes, and he said the price of gold in Europe is soaring. He said the early morning gold fix, gold is up $2.65. And I said, "Are you kidding me?" And by the time I got into the office, gold was limit down. And so when these things happen, remember, this stuff is not much changes over the main thing to look at. So anyway, that's the way you got to handle the news. So the news follows the trend, but this quadruple top that we have in gold is just absolutely huge. It really is, folks. If we take that out, that's very, very bullish for gold. So I don't know if it's going to or not, but we'll have to wait and see. That's the main thing that I'm trying to keep an eye on this morning. I don't even know where it's trading right now, but we will have Norm Winsky on in about 3 minutes that will give you some respite from this terrible voice that I have. Hold on here 1 second here. I wanted to double check something here. See, we've backed off about $5 in gold. It doesn't mean too much. I mean, it really doesn't. I mean, that's just a normal resistance against that lever. Just shows you how important it is. But watch it. That's the main thing that we're keeping a very, very close eye on. Now, the euro is reacting also to this, but actually not very much. These markets are not acting very much at all. It really isn't. It's just very, very. It's very, very minor right now. It means that probably not much is going to happen. That's, money follows, money talks, and we'll see if it's going to work here or not. I don't know what trade you took, so I don't know what you're in. I can't read this. It's open. I don't understand. Let me try to read this. If you just share. Oh, you can't. Yesterday was a whipsaw day. You can't really do much about that. That just happens. Watch. When I tried to talk to you yesterday about the opening price, folks, is watch that first 45 minutes. And if you'll notice, yesterday the market came right down to a low right at that 45-minute period. So anytime if you're that's your opening price, and that's basically what you're looking at. Don't worry, I'm not a trap person, and as far as bear traps or bull traps, just look at the patterns and try to find the ones that are easy to trade. And believe me, when you have these really wild up and down moves, those are not easy to trade. Do the things that are the easiest. Those are the ones that you try to find that look like they could be the best. That's that's the main thing of what we're watching. So keep in mind that that's That's the only thing you can control is when you're risking here. When you're trading really volatile markets, you also have more risk, but you also have more opportunity. And I've always felt if you buy on dips and sell on strength, you're going to be far better off than if you try to follow a movie. So we'll have to wait and see if that is going to if that's going to happen or not. We're going to have our good friend Norm Winsky on here at the break, and we'll see. He's always got some great stuff to look at, but there's some big things happening, and that's why he's coming on to let us know these next few days that we do have something really big happening. Of course, we have something pretty big happening on the 15th and 16th of March, it looks like, which is coming up over the weekend. But we'll watch this one very, very closely to see what's going on here. 877-927-6648. Stay tuned for Norm Winsky.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Norm Winsky from Astro-trend on the line. Norm, are you there?
Yes, sir, Larry. Good morning.
Good morning. You've got the mic, buddy. Take it off.
Okay, will do. I'll relieve you from your pain there. You're suffering, you know.
It's not too bad. Go ahead, buddy.
Good. Looking good, but not feeling so good, right, Larry?
There, amen.
All right. So anyway, I was last on your show on March 28th. I had a huge cluster coming up. I'll just refresh the folks' memory here. We had the 3-day weekend. The market was closed on Friday the 30th. So it was a 3-day weekend. I came on the 28th to alert the folks that we had a huge planetary cluster and a full moon coming up that weekend. And here's the markets. Just a quick review. I gave a watch I told you to watch the following markets: stocks, T-bonds, U.S. dollar, oil, corn, grains in general, but we're going to take a look at corn, soybeans, and gold because the full moon, you always round up the usual suspects unless the full moon is a special type that tells us to look at additional markets. So let's go look at all my charts are as of last night. So if something's happened here this morning, I may not know about it. Here's your S&P 500, and there's the 29th. You see the green arrow there, and we rallied. We were kind of in a narrow range on Thursday. We rallied on Friday. I was on there Wednesday, on your show Wednesday. We rallied on Thursday, and then when we came in Monday, April 2nd, oh my God, we were down. I think during the day there on Monday, we were down 80 handles or more on the S&P. We had over $100 range from the high on Thursday the 29th to the low on Monday the 2nd. Huge move there, right? So there you go. That was good. I alerted the folks. Here's your T-bonds. They didn't do quite the same thing. They kind of made a 2-day high over the 29th and April 2nd. But then that was a nice little top there. And then we had about a 4-day pullback there in the bonds. Here's your U.S. dollar. I'm going to call that a miss. Dollar went kind of nowhere. So there's a red arrow there for a miss. Green is good. Green, you had an opportunity to make some money. Here's your crude oil. Had a little bit of a rally there into our weekend window and topped out, looks like, on April the 2nd. And then we had about a nice 3-day pullback. And here's your corn. Oh, the grains went kind of crazy. We had the Friday, what was that? What do they call that? Growing. What do they call that, Larry? The expectation for planning
intentions report.
The planning intentions. There you go. Was coming out Friday, and the interpretation was it was bullish. And here we are. We were on the lows on the 29th, and then they rallied, I guess, on the crop report there, and then a little bit on Sunday night and into Monday's opening. And had you followed the advice of the crop report people, you probably would have lost money because that topped out right on Monday's opening, and then they went right back, flopped right back down. So that was on the full moon. Pay attention. If you're trading the grains, you don't want to use your brains. Trade the grains. Look at the moon. That's it, the moon and Mercury, All right, here's your beans. Did pretty much the same thing. They made made that low on the 29th, rallied up, topped out right on right near the opening, I think, on Monday, the April 2nd. Okay. Here's your gold. And it made a little bit of a low there on the 29th, and then we had a little bit of a rally into the first few days of April. All right, now looking ahead here, here's what's coming up. We got a huge cluster coming up, Larry, and this is not just any cluster. This is my very top stuff, okay? So my top stuff is I have the top category subdivided into 2 subcategories. We have I call these planetary polarity points. That's on the geocentric side. That's from the point of view of the Earth. As due to the relative motion of the Earth, we have station points. When the planets stop to turn to either go forward, that's called direct, or stop to go backwards, that's called retrograde. I know that physically they're not doing that, but it's relative to the Earth. And Einstein would tell you that's important. Relative motion is also important. You're changing the energy field there, and when the planets change trend, the markets change trend a high percentage of the time. Now the other things we're having here are the other thing I like, the top-notch thing is from the point of view of the sun. As the planets go around the sun, they also are oscillating up and down like horses on a carousel. They go around and around, but they also go up and down. When they get to their midpoint at 0 latitude, that's also apparently a very powerful energy point, and that's my other big thing. So those are my 2 top things. Planets from the point of view of the Earth, station points, and when they go going around the sun, 0 latitude. And guess what, Larry? We got 5 of these planetary polarity points in a very short amount of time, all compacted into about 10 days. You know, 3 or 4 of these are going to happen in the next 5 days.
Well, Norm, we have a question from one of our listeners. This regarding Einstein's theory of relativity. Did it have something to do with the sunspot, or how the Mercury was moving, and how he was able to prove his theory of relativity? Do you know anything about that?
One of his experiments to prove his theory, right? But we're not gonna have time to go off on an astrophysics or theoretical physics class here today.
Okay, go ahead.
I was very astute of that person to bring that up. Speaking of the sunspots and so forth, I just saw before we went on the show, they're predicting a major geomagnetic storm is going to hit the Earth this weekend, and it's related in my stuff here, which I already had all mapped out. So you have Venus is going to hit 0 north latitude tonight, Mercury hits 0 south latitude the next night, the 12th, night of the 12th, after the close. We have, let's see, we're going to get, and you're going to love this, Larry. It's a cousin of one of your favorite all-time things. We're going to have Mercury turning direct. Now, we're getting to the end of Mercury retrograde here, and one of the classic price patterns in the stock market and several other markets, when Mercury's getting to the end of the retrograde, the market tends to get narrow, and it also tends to get whipsaw. You know, whipsawing back and forth, doesn't hold support, doesn't hold resistance, drives all the traders crazy, you know. Now, not only is Mercury turning retrograde this weekend, it's going to do it on a new moon, within 24 hours of a new moon. I bet I won't have to say much here, Larry, but I bet you remember May 18th, 19th of 2015, when we had a new moon and Mercury was turning retrograde. This is like a close cousin, you see. So that was huge. That was the high of 2015. And I also checked back other dates. One date that popped up on that pattern was October the 11th. 2007 was the high day in 2007 before we went into the big meltdown. Not saying that's going to happen here, but I'm just emphasizing that this could be a very important window. And I think this window is even going to carry over into early next week, because we got some stuff coming up early next week. Let's see, did I cover that yet? No, I haven't gotten there yet. Okay, so some of the markets we're going to be watching based on this planetary activity. We got Venus involved, so we're going to have, let me get my Venus list out here now. We have cattle, copper, cotton, sugar. Those are on our watch list. Doesn't guarantee you're going to have a great trade. For example, as of last night, I pulled up this cattle chart here, and frankly, it doesn't look like a very good setup. I want to see the markets at an extreme. This cattle had a bounce here, and that kind of spoiled the party. I guess it was music time, so we'll continue when we come back.
We'll be right back with Norm Winski. You bet, Norm.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and we have Norm Winsky from Astro-trend. Norm, please continue.
Yes, sir. Just going to take a step back just to reemphasize that in addition to the big planetary points we have over the next 2 days, again, we have the new moon with Mercury turning direct. This is huge. Grains, precious metals, financials, stock market, all huge stuff. Okay, talking about the cattle on our watch list there, that just means you take a look, see if there's a good setup there. As of last night, I would say the cattle is not moving. Maybe that's a little cattle joke there, Larry. And so,
Okay,
and it's
very little.
Right. Well, I don't want to give the folks a bum steer. Right there, you go. So anyway, we got a little bounce here now, and so we're kind of in the middle. We need to have it break out to the upside, which you and I are not chaser people, so probably not too real excited about that. It'd have to have a big down here to go and retest that early April low to get me excited, you know. Here's copper, or maybe a little better if copper can get wake up here a little bit and maybe scoot up to the top of the channel. You're looking for a top. If it pulls back, you're looking for about 110 area. I'm sorry, 310 area for a possible low. If it pulls back, or about 320 on the top side. You get to either of those extremes, I would get interested. Here's your cotton is kind of trading a little bit of a wedgie pattern here, and it's probably going to come to an apex here in the next couple of trading days. That then you probably get a breakout either one way or the other, you know. Here's sugar is probably the most obvious pattern here. Here's the kind of thing we're looking for. Here's a nice little sell panic here as of yesterday, where you had some capitulation, a culmination to the downside. And so I'd keep my eye on sugar for a possible low here in the next 1 to 2 trading days. Here's coffee's coming up early next week. We got huge cycles for coffee coming up early next week. I will now talk about that on the next page. So Monday night, the 16th, Saturn is a 29.5-year cycle. The planets go around the sun in elliptical fashion, not in a circle. So there's a point where they are the closest and farthest away. Saturn will be aphelion. That's the farthest from the sun. That only occurs every 29.5 years. But wait, Larry, as they say on the infomercials, that's not all. The next night, this is amazing. Next night, Saturn in its ruling sign of Capricorn will also turn retrograde. So we have a very amazingly strong theme here with Saturn, and that is the ruling planet for coffee. So I'd keep my eye on coffee. Coffee has some extreme move. I'm going to go back here to the coffee chart now. You like to see the coffee maybe drop a couple handles here, test the bottom of the channel, and then that could set up a really, maybe possibly, some kind of long-term low there on coffee. Okay? I got a key date coming up over on my market math where we have a Gann style where we look at square numbers. And you got to love this, Larry. 177 squared is 31,329 days from July the 8th, 1932. I know you know that day, Larry, right? You were there, right?
I was born. Yeah.
There you go. That was the bottom of the Dow Jones in the 30s. And there we go. So we got that hard money coming out for this weekend with everything that's happened. Right, the 17th, early next week. And so I don't know what. I've never seen anything like this happen before, Larry, with these planets all bunched together like this. I think we're probably in the pinball mode where we're kind of ping, back and forth, driving everybody crazy for a little while here. I think when we get to the end of this congestion here with these planets, then it'll probably get some kind of trend going, Later on, I know you've been watching the bonds, and I'm going to guess the bonds have been frustrating you because they have not turned down. I'm going to guess they might hang up for another week when Pluto turns retrograde over the weekend of the 20th. I got the fractal model. It's been following my inverted fractal model to a higher price, kind of hanging up here, So those things are coming together at that point. All right, so back to the coffee here. We got a huge Saturn cluster here early next week. And then I got the 17th for the stock market. And now let's talk about day trading. Okay, you can day trade without having to watch the screen all day long, like you always tell the folks, Larry. And all they got to do is follow these times. This is for yesterday. You jot down these times and go look at your 1-minute bar charts. You will find that several of these times were profitable. All you got to do is sell if it rallies into a time or buy when it declines into a time. Use maybe a 2-handle stop or so. And I think you can make some money on these. And I know, just for example, you go and do that. I don't know if we have time for me to actually go through that, physically. I'll do one.
Yeah.
I'll do one here myself. Here we go, because I know this one worked out. You'll see how it works. Here's 3:19 p.m. yesterday. That was let me give you the 3 groupings. We have geocentric. That's from the point of view of the Earth. We have heliocentric. That's from the point of view of the Sun. And I do the U.S. natal. That's when our country was founded on July the 4th, 1776. We take a snapshot of the planets now. So just for example, here's what you want to do. Take these times. Go look at your S&P E-mini chart. Let me pull that up. Might take a moment to do that. There. Okay, this is the, we need to get yesterday, and we need to get the day session formatting. There we go. I got day session formatted now, and we got the 10th. And 10th, I want the 10th. There's the 10th. Okay, so let's go look at here. Look at my box here now. When I point, the time will change to where I'm pointing. Okay, there's 3:19. It's 1 minute before the high of the day. Right there. The high of the day was 3 ticks higher 1 minute later. And I think if you sold there, you would have been happy. And as you can see here, it had a pretty good drop, almost immediately 10 handles. And I think you would have had and then if you held it overnight, which I can't say I would have recommended that, but even if you held it to the close, I think you're down quite a bit, So that was a nice trade there. The others were probably more like singles and doubles. This is like more like probably maybe you might call that a home run, when you make 10 handles, right? So anyway, that's the idea. Take these times. I'll run them here so you can jot them down. I'll go slow. And then you can maybe screenshot them or shoot them or something. And then you can go check them out. I think you'll find most of them will work pretty well. I think there was maybe one miss out of about, we're only going to be looking at the ones during the regular day session. And I think you'll find that had a pretty high batting average on those. So I give you a whole, when you do my free class, I give you a whole month of those. If you make it through the class, or rather my class, I give you a whole month of those daily pages. I have a page for every trading day with all the information organized so you can use it easily to trade. So anyway, I've been doing this a long time, Larry, almost as long as you. Started in the 60s when I was a teenager, age 15. I'm 67 now, and kept studying the market, stumbled on astrology in college, saw that I could maybe have an advantage with the planetary cycles, and made some money while I was in college, and took that money and bought a seat on the CBOE in 1975, traded there and the Board of Trade for about 12 years. And then I got to be an old man in my 30s and decided I was going to go somewhere where it was nice and sunny. And so now I'm down here in beautiful Naples, Florida. So you can get a hold of me. You get the free letter and the free class Now I'm done with doing classes now for April. But the folks who call me right away, here's let me get my contact info on the screen there. Folks who contact me right away will be first in line for the May classes. So call me right away. Looking forward to talking with you. Looking forward to helping you. Any questions or comments, Larry?
Thanks a lot, Norm. We'll have you on again soon. You have a wonderful weekend, my friend.
You too. You get well. Take some zinc. That'll keep you in the peak.
Okay.
There are 5 reasons traders and investors fail to spot bear markets. It's a set of 5 very specific patterns that have preceded every bear market during the last 130 years. I'm Steve Rhodes, author of Mastering Probability and the #1 market timer in the nation as ranked by Timer Digest for the S&P 500 for the last 3, 6, and 12 months. You see, timing is everything. And on Wednesday, April 11th at 5 p.m., I'm going to share with subscribers exactly how to time the next bear market. Look, the last 3 bears averaged a decline of 49%, which means you've got to earn 82% just to make your money back. Wouldn't it be easier to avoid the next bear market altogether? Sure, countless experts tell you that markets can't be timed. But what they're really saying is that they can't time the markets. So let me teach you how. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guarantee trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Don't let that next bear market eat your porridge. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we've had a comment or a question about the Canadian dollar. Yesterday, we went down and made the 61% retracement down there at the 126 level. The low was 125.89. That was the exact, to the tick, 61% retracement. We haven't rallied very much off of that, but that is a very, very important number. So pay attention to that. The next thing I wanted to chat about, people have asked about, is the crude oil. And I wanted to bring this crude oil chart up because we had a really interesting pattern yesterday at this 64.60 level. And if you'll remember, we went through that like it didn't even exist. That pattern failed badly. This is why you have to use stops when you're trading these patterns, folks, because they don't always work. And that's not anything new, but it's not about how much money you make, it's how much money you don't lose. So you can't stand in front of it. The $64 question someone's asked me is, how do you handle when you have a losing trade like that? Well, I don't reverse patterns. I've tried it. It just doesn't work for me. But you have to stand aside. Look at, the Canadian dollar worked incredibly well. The S&P worked well. Some of them work, some of them don't. So you just got to, find out which one you feel comfortable with and trade that one, and make sure that you're going to use a stop, because if you don't use a stop, you're basically telling the market that you know more than the market does. And if you try to tell the market that, it's going to give you a lesson that you're not going to forget easily. So it's all about how much money you lose, not how much money you make. So protect what you're looking at here. That's the main thing. The gold still hasn't done very much. We're trading around 1357 again. We close above 1365, folks. That's very, very important. That would be a valid breakout of a quadruple top. And boy, I would really think it would go a lot higher if it does that. So we'll see. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
No matter what kind of trader